Mark Zuckerberg admits mistakes and fires 11,000 employees. The founder announces the largest job cuts in the company's history. The metaverse is to be expanded further. CEO Mark Zuckerberg spoke on Wednesday, November 9, 2022 of 13% of the workforce being laid off. Most recently, the group had 87,000 employees. Founder Zuckerberg also attributes the layoffs that are now apparently necessary to his own mistakes. In a letter to the workforce on Wednesday, he pointed out that business had grown at an above-average rate at the beginning of the corona pandemic due to the sharp increase in online trade. Like many people, he expected this growth to continue and therefore increased investments. But now the online business has returned to earlier trends, and the weakening economy and increased competition are also having a negative impact on revenues. I was wrong, and I take responsibility for it, Zuckerberg wrote. Facebook boss Mark Zuckerberg only wants to invest in a few projects. Meta shares rose more than 7% at the start of trading on Wednesday. Within the past 12 months, however, the group had lost around 3/4 of its market value. Meta wants to focus resources on a few high-priority areas. According to Zuckerberg, these include the advertising platform, through which the group makes a large part of its sales, and the long-term vision for the metaverse. In addition, the social media group wants to develop a discovery machine with artificial intelligence that will show members content that matches their usage habits. Competitor TikTok is currently enjoying great success, especially with young users. Meta has already reduced costs in recent months, for example by cutting budgets or eliminating extras. But that's not enough, Zuckerberg explained. That's why he made the hard decision to let employees go. The group is stuck in two crises at the same time, said analyst Mike Prue from Forrester. The company has taken a risky, long-term metaverse bet on the one hand, and it has competition from TikTok on the other, Prue said. Austerity measures are unavoidable, but not a solution to the problems. Expect further headwinds for Meta as Gen Z continues to abandon Facebook in favor of TikTok, Prue said. In addition, companies are likely to reallocate their marketing budgets, which could directly damage Meta financially. Meta, problems caused by economic concerns and data protection. The difficult situation can be seen in the business figures. In the third quarter, Meta revenue shrank 4% to $27.71 billion, the second straight decline. Profits even collapsed by about half to $4.4 billion. That was the worst result since 2019 and the fourth straight decline. The most important reason, the core business with advertising in online services such as Facebook and Instagram is doing worse than before. In view of high inflation and concerns about the economy, advertisers are more frugal. Meta's advertising revenues will fall this year, for the first time in the company's history, forecasts analysis service Insider Intelligence. Accordingly, revenues are likely to fall by 2% year-on-year to $129 billion. Meta has lost its unique selling points, said insider analyst Deborah Aho Williamson. The company no longer stands for particularly innovative approaches in the advertising industry. In addition, Apple's data protection policy makes personal advertising on mobile devices such as the iPhone and iPad, the so-called targeting, more difficult. It's a structural change for the advertising industry. In February, Meta management put the losses from this alone at more than $10 billion. The fact that other advertising-financed online services such as Snapchat are also suffering is little consolation. As sales go down, expenses go up. Above all, the development of virtual worlds driven by Zuckerberg under the keyword metaverse is expensive. The cumulative losses since 2019 amount to $30 billion. Many shareholders criticize these investments as too high.